Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is September 25th. We are closing out another month here quickly. I believe this is the last week of investing for September. So get ready to roll into October in the final quarter of the year. But for today, we are going to take a look at an icon here, Coca Cola. I'm sure everyone is aware of this company, but let's dive into it. So, Coca Cola history: the product that has given the world its best known taste was born in Atlanta, Georgia on May 18th, 1886. Dr. John Stith Pemberton, a local pharmacist, produced the syrup from Coca-Cola for Coca-Cola and carried a jug of the new product down the street to Jacob's Pharmacy, where it was sampled, pronounced excellent, and placed on sale for 5 cents a glass as a soda fountain drink. Carbonated water was teamed with the new syrup to produce a drink that was at once delicious and refreshing, a theme that continues to echo today wherever Coca-Cola is enjoyed. This is the gentleman who created it, and if you want to know more about this company, check them out, www.coca-colacompany.com. That's www.coca-company.com. That is their homepage where I pulled this information from. And you can see they have a lot of brands that you are probably familiar with. Ades, Aha, Barks Root Beer, obviously Diet Coke and Coca-Cola, Fanta, Fresca Mix. Then they have some alcoholic beverage, Jack Daniels and Coca-Cola, Minute Maid. They have some teas, Gold Peak Tea, Fuse Tea, Schweppes, Simply Spread. I mean, they just have a lot of brands. Vitamin Water. What's another one here? You're probably Body Armor. Like I said, so a lot of different products that they are. Smart Water, so waters, sodas, teas, even alcoholic beverages. A lot of products that you are probably familiar with. And again, they have been around well over 100 years. Just an iconic brand. And whenever you think of Coca-Cola, you obviously think of Coke, but again, very, very full of other brands within their lineup here as well. Let's dive into the metrics here. Now, they were down 1.04% on the day. That is why we're taking a look at them. We are talking about the Coca-Cola Company, ticker KO. This is out of the consumer staple sector. 52-week range as low as $54.02, as high as $64.99. They are a little closer to their 52-week low, but kind of floating in between the 52-week low and the 52-week high here. Average volume of 12.36. Today's was 12.34. Pretty much a sell-off throughout the day. Looks like they recouped a little bit right at the last hour of the day, but for the most part, just a sell-off throughout the day. Market cap of $246.487 billion, a beta of 0.55. So they are less volatile than the overall market. PE ratio is a little elevated here at $23.65 per share. Little higher than I would want this. Excuse me. Obviously, if you were to throw this on your watch list and see if it pulled back closer to this 52-week low, we could get it a little lower than here. But Coca-Cola is one of those iconic brands that typically sells at a premium because it is such an iconic brand. EPS, earnings per share, is $2.41. Next earnings date, October 24th, so look out for that one here coming up next month. For dividend, $1.84 paid out in the year. They are a quarterly payer. We'll see that here in a minute. And they have a nice 3.19% dividend yield. Ex-dividend date was September 14th. Looks like they are going to pay out on October 2nd. So you would not be in line for this October payout if you were to buy them now. 1 year target estimate of $69.86. So at least according to Yahoo Finance, they see some upside in the stock price here. I am not affiliated with Yahoo Finance, just one of the sources that I like to look for information at, and I always recommend more than one source. So we're going to see another one here in a minute, and make sure that you are choosing a couple different sources to pull your information from so you can back check and make sure the information you are getting is accurate. Now, I like to go in and look at statistics. We're going to look at dividend yield theory to see if this is potentially undervalued. To do that, we look at their 5-year average dividend yield of 3.05. We compare it to their current 3.19%. And same thing here, forward annual dividend yield, 3.19%. And since it is higher than their 5-year average, this speaks to some potential undervaluation in this one. If this number was lower than their 5-year average, that would speak to some overvaluation. So this doesn't give us a huge margin of safety at 3.19 compared to the 3.05 average, but it is potentially undervalued at these prices. Now, the payout ratio is just under what I'm looking for. I like 75% or less. This is 74.69%. So it is elevated. Let's see what the dividend yield growth looks like here in a minute. Before we do that, we're going to jump into the financials. We're going to look at free cash flow, but there is a lot of good information under the financial tab. You're going to find their balance sheet, their income statement. You can check out their revenue, see if it's growing over time. You can check out their debt levels. You can check out their assets over liabilities. A lot of good information in there. If you are interested in this company, you need to get in and do a deeper dive on their financials and see how healthy they are as a company. Now, we like to look at free cash flow. We want growing dividends over time, and dividends are paid out of free cash flow. So to get growing dividends, we want growing free cash flow. So we go back to 2019, we see 8.4 billion, 2020 8.6 billion, 2021 big jump up to 11.25 billion. 2022 looks like a drop back to 9.53, but overall from 2019 to 2022 there is free cash flow growth. And even though it looks like there is and this right here is where we're at now, looks like they're about 9.4 so billion. But as you can see here, if you also look at right here, repurchase of capital stock, they are repurchasing their own shares pretty aggressively. 1.1 billion shares there, 118 million here, 111. And even though you see 2021, it looks like they dropped down from 11.2 billion to 9.53 billion. But part of that can be contributed to they increased their buybacks of shares. Looks like they're even buying back shares around 1.29 billion so far this year as well. So very nice to see growing free cash flow over time, repurchasing their own shares. All the metrics on this one look pretty good so far. Let's keep going. Now, another source that I like is stockanalysis.com. Again, you pick out whatever sources that you like. Just make sure you're looking at 2 or more sources so you can back check the information you're looking at. And according to the 12 stock analysts that have taken a look at this, they call it a consensus buy. They have a low estimate of $63. It currently sits 10.53% lower than their lowest estimate. Average estimate of $69.92, 22.67% lower than their average estimate. And if it happened to hit their high estimate of $74, that would be a 29.82% increase in the stock price. All the while, you could collect that 3+% dividend yield. So I always like a company when it is significantly under even their lowest estimate. So 63 is their lowest estimate, and it sits $6 under their lowest estimate. So if it was to come back up, that would be a 10.53% increase. That's very nice to see. Now, again, statistics, we're going to look at return on equity, return on invested capital, see how they are doing at reinvesting their own funds into the business. To do that, we look under statistics again. We go over here to ROE, return on equity. I like 10% or better here, 42.8%. Smoking high here. This is a smoking number. Very, very nice numbers all the way around. Invested capital, again, I like 10% or better on their return on invested capital. They're at 20.80, twice as what I'm looking for. So the numbers really, really are very, very nice on this one. And this is a Warren Buffett company. This is one in his portfolio, has been for decades. So I am not surprised to see all the numbers looking as well as they do. I also like to look at estimated EPS growth over the next 5 years. I like 5% or better. They've got 10.92% on this one, so twice as high. Their estimates are twice as high as what I like to see. And as a bonus, revenue forecasted growth on this one is sitting at 5.18%. Very, very nice numbers all the way around on this one. Let's take a look at the dividend. So as we said on the previous page there, we're looking at the payout ratio. This says 76.03. We saw 74 and some change on the first slide. We're going to call it around 75%. I like 75% or better. So this is right up against where I am at as far as what I'm looking for. This gives them a little bit more room to increase that dividend over time, which they are. Their dividend growth is sitting at 4.60%. So with a 3+% dividend yield, 4.6% growth, 75% payout ratio, they do have some room to increase that dividend over time. They also have some room to pay down debt, to make acquisitions, that sort of thing as well out of their free cash flow. Let's look at their payout history here. We're going back to September 14th, 2020, 41 cents. March 2021, they raised it up to 42 cents. March 2022 up to 44 cents, March 23 up to 46 cents. So it's a pretty consistent 2-cent raise every year around the March timeframe. I would bet that they will raise it up again March of 2024, another 2 cents. And their payout dates are April, July, October, and December. That's whenever they pay out. Their record dates being March, June, September, and December. So very, very good numbers overall on this one. Let me know what you think of Coca Cola. Do you drink their beverages? Do you have it in your portfolio? Drop it down below in the comment section and let me know what you think. This is the vested interest stock screener. This is how I set up the videos as well as how I look at a stock to see if I am interested in doing a deeper dive. So this is on a high level to see if I'm even interested in the company. If I am interested and it meets 5 of the 8 or 6 of the 9, if it's a financial company like a bank, then I will do a deeper dive. I will look at the financials. I'll get into the revenue. I'll look at their debt to equity ratios. I'll look at their balance sheet, their income statement, all that information under financials on both of those pages. Again, you pick whatever sources you want. Those are just 2 that I like, and do a deeper dive. And I will also run a discounted cash flow analysis on the company to see what I think it is worth. Coca Cola looks like an interesting one right now. Again, it is a Warren Buffett favorite. It has been in his portfolio for decades, so might be worth at least throwing on the watch list, taking a look at it, and seeing what you think about the company. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we are watching, ones that we're buying, ones that we may be avoiding altogether. Just tips and tricks as investors that we've learned along the way. We can't benefit from each other's investing, but we certainly can benefit from each other's information and experience. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can money, should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counsel of a certified financial advisor.